Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management E-News. Thanks for joining us. So we've had quite a move in the stock market here in the United States. You know, we saw a ton of volatility after the so-called Liberation Day on April 2nd. Markets sold off pretty sharply, but from the bottom in the month of April that we saw in the stock market, the S&P is up a little over 20% off that bottom. So we've seen a huge move to the upside in the stock market, which is certainly welcome news, and we're not going to complain about it. But it's also more proof that we can certainly not time markets here or anywhere, that markets are going to always confound and always do the opposite a lot of times of what we think. And so this is yet another example of a lot of you being worried and wanting to so-called do something because that felt like the right thing. But if you had done something, you missed this awesome move we've seen off the bottom. Now, is this all the volatility behind us? Probably not, unfortunately. But the good news is we've seen a pretty significant bounce where the S&P is in slight positive territory on a year-to-date basis. And if you remember, just a few weeks ago, it seemed like the end of the world for a lot of you, depending certainly on your political bent. You know, Josh can talk about that, you know, even though we like this bounce, that there's probably lots more volatility to come because we still don't have much certainty around trade. Remember, the 90-day extension, we're halfway through that. So, you know, TBD in terms of the trade situation, and we probably haven't seen a lot of the damage yet that's been done to the economy. The good news is the U.S. economy continues to be a juggernaut. It got kicked in the face and still is proving to be resilient. So that's certainly the good news.
Yeah, we've seen obviously a massive headline-driven rally, but really a lot has not necessarily been definitively resolved. Remember, the big 90-day pause with Europe is probably the most relevant, and we're another 40 days or so from trade headlines as it relates to the EU and the United States probably dominating the news. European politicians seem to have a strong distaste, if not absolute disdain, for Mr. President Trump, so I wouldn't be surprised if the Europeans take a pretty adversarial tact, and you'll see a lot of the same doomsday alarmism that we saw in the beginning of April, but of course that's a pretty consequential trade relationship as well. As it relates to the Chinese, you know, maybe there's the contours of an agreement, but nothing definitive has actually been signed. And if you'll remember, the last document they signed in 2018 didn't actually seem to change anything because none of those promises were ultimately fulfilled, and of course the trade deficit continued to balloon after the signing of that agreement. So did anything substantively change? No. Of course, more deals will likely be trotted out in the interim, similar to how we saw with the United Kingdom, but as inconsequential as that trade relationship actually is, are they ultimately going to move the needle? You know, that's an open question, but the big takeaway, I guess, is there's certainly going to be a lot more trade-related headlines to come in the next 2 months. So buckle up because no one really knows ultimately how any of this is going to be resolved.
Yeah, expect volatility is essentially what we're saying. You know, it's been great to see the move higher off the bottom, but we certainly don't think all of the volatility is behind us in 2025. You know, a lot of the economic data that we've been getting, whether it's on earnings or the U.S. economy, is backward looking. It's data that's already happened, and a lot of the actual trade, the tariffs, you know, those costs aren't factored in. So there is certainly going to be a lot of news that is going to move markets in both directions. So we expect volatility. We will probably see continued weakness in the economy. It's not going to be like the global financial crisis, but we'll probably see a technical recession, which is just 2 consecutive quarters of declining GDP, but it'll be probably quite shallow. And like I said, the good news is the U.S. economy is proving to be really resilient. We are a juggernaut in the world. Hopefully that continues. So, as always, if you have questions about your situation and your accounts, give us a call at the office, 800-743-0988, or email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks.